We are now joined by a panel of experts to discuss the outlook for our economy. In studio with me is Chris Hart, Chief Strategist at Investment Solutions, Annabel Bishop, Chief Economist at Investec, and Alex Smith. He's an economist at F&B. Gentlemen and lady, thank you so much for joining me. I'm surrounded by great minds. Annabel, let me start with you. This week, everybody was watching to see what Fed Chair Janet Yellen would say, and we've got all of this other news that is unfolding with Greece. Let's maybe go back to the Fed and maybe try and understand what is the next logical step that you think the MPC committee there might decide on.
Well, I think we've seen some interesting comments come out of the Federal Reserve Bank, or as you say, the Central Bank of America, the MPC committee. And essentially they have been looking very closely at their economy and also economic growth. But interestingly, they've implied that they could actually hike by less in terms of interest rates this year, and that could be a slower trajectory as well going forward as well. And I think that's really key, because the implication for South Africa means that we may potentially also see a somewhat more moderate interest rate cycle on the back of what happens in the United States, should this be the case. And of course, where this really comes from, besides the actual movements in interest rate differentials and monetary policy, is that if we do not see very substantial interest rate hikes this year in the US, we can actually see potentially less money flowing out of South Africa and less impact on the rand. And the rand's very key for monetary policy in South Africa. Rand weakness tends to push up inflation. Meaningful rand strength can actually moderate it.
Annabel, Chris has just said that if the US is hiking, so we're most likely to hike, is this where we're going? And maybe more importantly, are we ready?
I take the view that interest rates were lowered too much already in the previous cycle, and that the reason for our low growth is not because of where interest rates are. It's more because of other policy mistakes that we're making. And that because of that, the Reserve Bank is sitting with this dilemma. You know, inflation is high with upside risks and growth is low with downside risks. That's a stagflation condition. And we're doing everything in our power that, how can you say, reinforces stagflation, raising tax rates, keeping interest rates low. And basically that was exactly the opposite of what was done at the end of the 70s to try and, end deflation or stagflation. Then there's of course other secondary effects. So we've got policy direction, which is a problem. That's the primary reason why we're not growing. And then the secondary reason is we've got other physical things like Eskom and that type of thing, which is also constraining the ability to use existing capacity. So that's really the big difference. So I think that irrespective of what the Fed does, the events may be being taken away from the central bank. They may well be forced to hike rates regardless, especially if the rand starts to weaken, not because of what's happening in US interest rates, but because our economy doesn't get off the ground and some capital starts to go to better opportunities.
Alex, let me bring you in here. We've already painted the picture of the impact of the US and what this will do to our local currency, inflation and so forth. But have we already started to see the impact or the flow of funds moving away from emerging markets like South Africa towards more developed markets?
Yes, I think we have seen that. Probably 2013 was one of the best years for South Africa in terms of capital inflows. And since then, we've actually struggled to attract capital, particularly this year in terms of bond flows. They've basically been net flat for the year. We've attracted some equity inflows. But in general, the sentiment towards emerging markets has been quite weak this year. And it's unsurprising when one considers what's been going on, not just in South Africa, obviously with a challenging growth backdrop, but also in other big emerging market economies. For example, China's growth has been slowing, and there's quite a lot of concern there around a significant debt burden in the private sector, and also perhaps a toppish equity market. You've got Brazil that's fallen into a recession, and Russia that's fallen into a recession, and various other concerns around geopolitics in various emerging market economies. So general sentiment towards emerging markets is not that sound. At the same time, what we're starting to see is that the growth differential between emerging market economies and developed market economies is actually narrowing. So in the past, growth was driven to a large extent by emerging markets, but that's actually changing, and now the baton is being handed back to the developed world. So we're seeing European growth starting to pick up quite nicely. And although the US had a bad first quarter, in general, US growth has been quite decent. So those economies are starting to look a lot better, which obviously now implies that investors are looking back to those economies for investment opportunities. And also with the US raising interest rates, that's starting to provide slightly better yield opportunities for investors.
Annabel, I would like to expand further on sentiment and some of the pressure points that have come through. During the course of this week, we did have some economic data in terms of inflation numbers. Just unpack that for us. Where are we in terms of how bad could it possibly get in terms of sentiment and the numbers? What are they indicating about our state of affairs?
Look, I think sentiment is quite poor in South Africa. We obviously have a depressed consumer confidence sentiment reading earlier this year, business confidence as well, and it's really reflective of very weak economic growth conditions, so that's a concern. We've obviously seen the inflation rate turn, and it's starting to tick up now, and the expectation is it could hit close to 7% in the first quarter of next year, mainly as a result of base effects, because we had the very low base established with low petrol prices at the start of this year. But we're also seeing negative data coming through on the manufacturing front. The PMI readings have been quite poor as well. Electricity obviously has seen production levels come off, so that's clearly concerning as well. And I think the worry really is that we actually have got a generally subdued business sentiment environment in South Africa. One of the main reasons for that is that policy has really escalated in South Africa, whether it's a threat of private sector property rights, which obviously greatly concerns corporates, because that clearly makes it very difficult for them to price risk in South Africa and look at the returns that they get, as well as some other restrictive regulations as well. We've seen restrictions in the labour market, and in general it is making it a lot more difficult to do business in South Africa. There are World Bank studies that back up these views, along with another number of other institutions. So the more difficult you make it to do business in the country, the more you're going to see economic growth start to slow. So I would say that we're in a difficult point of the South African economy. We clearly need to see government start to put forward more business-friendly practices, ones that increase the ease of doing business, not ones that increase regulation and make it more difficult and time-consuming to apply. And I think from that perspective, we managed to free up the economy. We can actually see faster economic growth going forwards.
Chris, I'll come back to you. I just want to touch on Alex, because there's a particular insight I'd want from you. Alex, is there too much red tape in South Africa? Will you speak about the SME sector? This is the place where we can get most out in terms of job opportunities. Too much red tape?
Yes, look, I think there's a couple of things that are constraining the SME sector. If you look at some of the research that's been done, like what Annabel was referring to in terms of World Bank and IMF research, there is quite a lot of red tape in place. So the SME sector benefits from certain things in South Africa, like credit access is quite good, but unfortunately there are quite a lot of regulatory hurdles, and also there's some infrastructure constraints that the SME sector is suffering from at the moment. Obviously electricity is the most clear and apparent one. But there are also other infrastructure constraints which are inhibiting the ability for SMEs to get to market and also to export their goods elsewhere. But bear in mind, with South Africa's large trade deficit, we would like to see the SME sector participating in terms of exports as well, because exports at the moment are mostly dominated by large corporates. And of course, with the domestic economy quite slow, that's also making it quite difficult for SMEs to grow, because the market here isn't really growing that much. So that would also help if they could export more. They could access growing markets elsewhere, particularly, for example, on the continent. So yes, red tape is a concern, but there are also some other challenges, in particular infrastructure, which is inhibiting the growth in the SME sector.
Chris, I'd like you to come in here. Alex was talking about growth elsewhere on the African continent, but I was eavesdropping on a conversation earlier on you had with Annabel, and it was with regards to infrastructure that Alex touched on. And you said something interesting about infrastructure doesn't create jobs.
No, exactly. And I think one needs to appreciate investment in businesses do, okay? And that's why it's so important that we actually, create that space. So how do you get investment in businesses? Well, firstly, your large corporates is where our savings sit. That's about 14% of GDP. The rate of savings is about 14% of GDP. That's virtually entirely in the actual corporate sector. They've got resources, so you actually can't say we've got an SME policy. We've also got to make it easier to do business on for the large businesses, but to get the balance right, you have to actually get household savings up. And so that means you've got to actually look at reforming the taxes that target households, things like capital gains tax, transfer duty on property, death duty, things like that, erode the ability of households to actually accumulate capital. Now, our problem is that we need to create about 10 to 15 million jobs, in the next 15 years to actually solve our unemployment problem. That means actually generating 2 to 4 million new small businesses. Okay, that can only be funded through household resources. That's how small businesses start. So that's why it's important to do that. And then you've got to shift the regulations. Not to say that we don't have rules, okay, but your rules should not require economies of scale to be compliant. And that's the problem with these process-orientated regulations, is that they really shut the small, medium business sector out of the formal economy. Your micro enterprises, in other words, your more desperation activity, your robot vendors and fruit vendors on the street, they get attacked by the authorities instead of actually trying to build their capital base so that they can progress from micro to small, from small to medium, medium to large. That helps feed the stock exchange, for instance, as well. These are critical things, and we're not getting that right at all. To me, they're major mistakes. Eating seeds and wondering why we're not getting harvests. That's what these taxes are about. Regulation. If a company is sitting with a cost structure, they've got to control it of the larger area. Mm-hmm. If your regulatory compliance costs are shooting out, there's less money available then to grow the business, and that's across the economy.
Chris, I have to stop you there because we're almost out of time. I'd like to get closing comments. I do understand that when you said it's about policy and having, the right regulatory compliance. Annabel, from you, your closing comments, what could possibly make it better for us? And then Alex, I'd like to get a comment from you.
Well, I certainly think that South Africa needs to have a more dynamic economy, one that has a lot less restrictions in the labour market. We obviously need to solve our infrastructure issues. We're well aware of that. And I think we really need to focus on tripling the size of the private sector, the private corporate sector. If South Africa fails to triple the size of its private corporate sector in the next 15 years, we're actually going to see a situation where economic growth slows so substantially that we're actually going to run into huge issues. And ultimately, that's when you start to see the problems come through that we've seen in Greece, because we've got such an exceptionally bloated civil service. It costs a huge amount of money, and unless government actually cuts back on the expenditure, it's going to run out of money. And these are the big concerns at the moment, and ones that are shared by the rating agencies.
Yeah. Look, I must agree. I think it's really about getting more bang for our buck in the public sector. So cutting back on a lot of the wasteful spending that is taking place right now, and that will help to avoid having to raise taxes and meddle with the incentives in the private sector. And then beyond that, I think it is really about creating an environment that does foster investment. And we need to look at the rest of the world and see what the successful countries are doing in terms of boosting investment and also in terms of creating certainty. So it's not just about the right policy, but it's also about communicating that policy firmly and making sure that you don't change your mind and then change things regularly and create investor uncertainty. So we need certainty, and we need public sector spending that's far more efficient.
Well, you've heard it. So we need certainty, we need better policies, and we also need to ensure that we do have a greater role of the private sector coming in. Thank you so much to my experts here at the desk: Chris Hart, Chief Strategist at Investment Solutions; Annabel Bishop, Chief Economist at Investec; and Alex Smith, an economist at FNB.